All right, in this explainer, we're digging into a process that's absolutely fundamental to the business world, but honestly, it's often misunderstood. We're talking about audit planning, the essential blueprint that underpins financial trust and really all of corporate governance.
So let me start with a question for you. When you hear the word audit, what comes to mind? Probably some tedious but necessary compliance check, right? But have you ever wondered what really separates a standard box-ticking exercise from an audit that provides genuine insight and real value?
Well, the answer is surprisingly simple, but it's also incredibly powerful. It all comes down to the plan. A great audit isn't just about how well it's executed. It's about the intelligence, the strategy, and the foresight that go into it before a single document is even looked at.
So, first things first, let's just reframe our thinking. To really get a handle on modern audit planning, we have to move way beyond this old idea that it's just a glorified checklist of things to do.
If you look at the professional standards, they define it as a continuous and dynamic process. And those keywords are key here: continuous and risk-driven. It's not a one-time event that happens and then you're done. No, it starts way before the fieldwork begins, and it actually evolved throughout the engagement. The whole thing is built around one central idea: risk. And this is exactly why it's so critical. The fact is, without a proper plan, the entire audit is basically compromised from the get-go. It's not going to be effective at finding the real problems, it's not going to be efficient with time or money, and chances are it won't even meet professional standards. You see, the core principles of auditing have actually evolved over time. Of course, you still have the timeless concepts like integrity and independence, but a crucial new pillar has been added, and it's highlighted right there: the risk-based approach. Honestly, this is the game changer. It makes sure that auditors are focusing their energy where it truly matters most. So, how does this whole risk-based planning thing even begin? Well, it all starts with intelligence gathering. You simply can't plan an effective audit without deeply, and I mean deeply, understanding the organization you're examining. It's a classic strategic principle, right? Think of it like a military operation. You never, ever plan the mission until you understand the terrain. The world of auditing is absolutely no different. And the breadth of this intelligence phase is what's so important. Auditors have to dig into everything: the economic pressures on the entire industry, how the company actually makes its money, the strength of its IT systems and internal controls, and any major changes, like a recent merger or a brand new IT system. It's this complete, holistic view that allows them to start sniffing out potential risks. Okay, so once you understand the terrain, it's time for the next crucial step. You have to define the specific mission. Because here's a key thing to remember: not all audits are created equal. And this isn't just a suggestion. According to the professional standards, this is the very first mandatory step. Before any other planning can happen, the team has to formally declare what type of audit they are performing. This one decision dictates everything that follows: the scope, the risks, the procedures, the whole shebang. And this table right here, it shows you exactly why that decision is such a big deal. Just look at the differences. A financial audit, it's laser-focused on finding material misstatements, looking at financial records and invoices. But a performance audit, that's all about inefficiency, using operational data and KPIs. Then you have an IT audit, which is worried about system failures and data integrity. The objective, the risks, the evidence, they're completely different for each type. All right, now we're getting to the heart of the matter: designing the overall audit strategy. This is where all that intelligence and those mission objectives come together to create a high-level game plan. So, guided by international standards like ISA 300, the strategy document isn't supposed to be a long list of individual tests, not at all. Instead, it defines that high-level game plan by setting the overall scope, the timing, and the direction for the entire audit team. And this is where the really crucial choices are made. How wide are we going to cast the net? Are we going to do an interim audit before the year ends? Are we going to use advanced data analytics or just stick to traditional sampling? And critically, how are we going to allocate our resources? The people, the specialists, the budget, all based on the risks we've already identified. And notice, fraud risk isn't an afterthought. It's a core strategic consideration from day one. Now, if there's one thing to remember from all this, it's this linkage rule. This is the absolute cornerstone of modern auditing. See, it's not enough to just have a strategy. Every single decision in that strategy must be a direct, documented response to a risk you've identified. Like you see here, if the team spots a high risk of fraudulent revenue, the strategic response isn't some vague idea. No, it's specific. Get a partner more involved.
bring in forensic specialists, and run extensive data analytics on sales. It creates a direct defensible line from every threat to a specific action.
All right, let's move into the final phase of planning. This is where that high-level strategy gets transformed into an actionable, boots-on-the-ground blueprint for the audit team.
This is really the final translation step. The strategy provided the what and the why, and now the detailed audit plan lays out the how. It's a granular document that lists out all the specific procedures, the tests, and the steps the team is going to take to actually execute the strategy and tackle those risks. And this is critical. This plan isn't just finalized in some back room. It has to go through a formal approval gate. It's aligned with the company's own risk register, it gets signed off by senior auditors, and finally, it's communicated to management and the board's audit committee. This makes sure everyone is on the same page and accountable before any real fieldwork even begins.
So, what's the big takeaway here? It's this. When audit planning is done right, when it's risk-driven, when it's strategic, when it's meticulously documented, it achieves something truly remarkable. It transforms the audit from just a compliance burden you have to endure every year into a powerful, strategic tool that can deliver real insight and actually drive improvement within the organization.
Which leaves us with one last question for you to think about. Consider the audits that happen in your world. Are they just a compliance check, another box to be ticked off the list each year? Or, thanks to a really robust planning process, have they become a true strategic asset? As we've seen today, the difference, it's all in the plan.